Let's talk about the startup universe also. If you look at car trade, Nykaa, Zomato, PB Infotech, Policy Bazaar, in fact, some of the other latent view of the world, Map My India type companies. I want to understand from you, how are you looking at the startup universe? Because the way market has compressed the valuation of all these stocks, there was a sense that in the unlisted startup universe too, the valuation or perception or how much the promoter actually was looking at the company being valued has also come down. Has that happened? Because you work with many of them.
No, certainly, Ajay, I completely am with you. And if I can see, the whole world was gung-ho about the startup valuations, the way Paytm and Nykaa and Zomato were, the IPOs came. And today they are down 65-70% from their IPO prices. And this is a reality check for them. See, when these startups were valued, and if I can go a little bit out of, and in the private markets, see, these were private and closed markets. And they did not have the benefit of the harsh glare of the public market behind them. In private closed markets, the valuation that the price discovery is not perfect. That price discovery is also governed by multiple, protection clauses. There is anti-dilution clauses. It's a private club which drives a valuation. And if I may say, the whole market is driven by higher and higher valuations. There is an incentive, or shall I say, a pervert incentive for getting higher and higher valuations at a subsequent rounds. Now, and this is possible because it is a private and closed market. But once these issues, which are burning cash, and the whole model is the cash burn, there is a huge customer acquisition cost with no positive cash flows visible in the near vicinity. Now, if you are not going to earn cash for the next 3, 4, 5 years, how you are going to convince the larger institutional investors? So once they have the glare of the public markets, most of them will flounder. And that is also actually visible in the valuations that each one of them are seeing in private markets. I mean, the very fact that each one of them is going gung-ho about raising capital, I mean, that itself is indicative of the phenomenon that they themselves feel that the valuation is too high. Let me have fun while the sun is shining. I mean, let me raise the maximum amount of capital which I can while the markets are good. I mean, would you need, obviously, one very fact that they are burning cash, but they are raising cash much more than the cash that they are burning, which itself is an indication that in their own personal views also, these valuations are unsustainable.
That's a very interesting line which you just said, that it's a small private club in the startup universe which actually determines the valuations. We'll talk about it offline, Rajiv, one of these days, because this is a very big asset class which has come up. Big HNIs, family offices, funds, VCs, everybody's interested here. Some great companies, but valuations is the question mark. Thanks very much for joining us today with your thoughts on all these matters. That was Rajiv Shah, RBSA. Works a lot on valuations with some of startup ecosystem as well. He works very closely, and valuation and consulting is the area of expertise.